As the economy teeters on the brink of uncertainty, could precious metals be your best bet?
That's right. We're diving deep into insights from industry leaders like Jeremy Szafron and Gary Wagner, who are breaking down what you need to know about gold and silver's remarkable price movements.
Best of all, we've compressed their hours of analysis into bite-sized AI-generated summaries, so you can grasp the essentials in minutes.
So buckle up. We start with Jeff Snider exploring the ramifications of the recent inversion in the oil market.
Don't go away. Stephan reveals how America's relationship with China signals a potential economic reset. This analysis is crucial for investors.
And as a quick reminder, today's content is for educational purposes. Always do your own research before investing.
Welcome to Eurodollar University, where today we'll explore insights from Jeff Snider on recent fluctuations in the oil market.
Jeff points out that inversions in the oil curve historically suggest economic challenges ahead.
Jeff Snider emphasizes that an inverted oil curve is a key signal of potential economic troubles, aligned with historical patterns.
He suggests that such inversions often correlate with decreased demand and economic slowdowns.
Could you explain the broader economic implications of this inversion, Jeff?
Jeff notes that the inversion indicates lower expectations for demand, which might lead to market instability.
Jeff illustrates how prior oil curve inversions have led to economic declines.
He stresses the importance for investors to recognize these trends as warning signs.
What are Jeff's outlooks for the market following this inversion?
Jeff predicts increased market volatility and potential downturns as these implications unfold.
In summary, Jeff Snider advises that investors prepare for market fluctuations and possible corrections.
He suggests investors conduct a detailed portfolio review to identify at-risk assets.
Today, we're examining Stephan's analysis about America's looming economic reset related to its dealings with China.
Graham outlines that this reset could significantly reshape the financial landscape in the United States.
Stephan stresses the importance of understanding the economic implications stemming from U.S.-China relations.
He notes that the deep interconnection between these economies poses certain risks that could impact global markets. Graham cautions that over-reliance on China for manufacturing makes American businesses potentially vulnerable.
Could that mean higher prices for consumers if disruptions occur?
Exactly. As supply chain issues become more pronounced, costs may rise significantly.
What kind of market shifts does Graham foresee?
Graham predicts that substantial volatility could occur as new policies are implemented.
How should investors act based on Graham's analysis?
Graham advises that they prioritize a diversified portfolio to navigate potential risks.
What does Graham predict for the economic landscape in the coming years?
He suggests the economic reset's full effects may take years to manifest, advising vigilance and adaptability.
Graham concludes that navigating these changes will require proactive financial planning and strategic investments.
Indeed, awareness of market trends and policy shifts will empower individuals to manage their finances more effectively.
Today, we're looking at insights from Gareth Soloway, who discusses concerns about future market conditions.
He highlights inflation and consumer behaviors as key factors indicating possible downturns.
Gareth expresses concerns that market conditions could lead to crises.
He attributes this potential downturn to inflation and consumer sentiment.
How does rising inflation impact consumers?
Gareth remarks that higher inflation generally leads to reduced purchasing power.
What advice does Gareth have for investors?
He suggests diversification and defensive assets as vital strategies.
What are Gareth's predictions for the coming months?
Gareth expects significant volatility and recommends investor readiness.
Gareth concludes that adaptability is key for upcoming market navigation.
Being informed on market changes helps investors make strategic decisions.
Today, we delve into Gary Wagner's insights into the silver market.
Gary highlights the emerging trends that could impact gold. Next.
Wagner states that bullish trends in silver might trigger price movements.
He suggests these trends could create momentum for gold as well. Wagner notes an optimistic sentiment in the silver market.
He stresses this shift may influence gold market perceptions. What breakout signals are indicated for gold?
Wagner discusses technical signs suggesting potential rises in gold prices.
What predictions does Wagner make for silver and gold prices?
He expects significant price increases for both metals, advising close attention to market stability.
Wagner highlights the need for diversification in precious metals.
He advises being aware of market signs to time investments effectively.
Today, we will be discussing insights from Sam Altman about how technology is reshaping the job landscape.
Altman asserts that technology will greatly modify job availability and societal roles.
Sam Altman points out that while automation may eliminate specific jobs, it will simultaneously usher in unforeseen job categories.
This transformation offers unique challenges and prospects for the workforce.
Altman points out that positions relying on routine tasks are at high risk due to automation.
He encourages workers to pursue skill development to remain competitive.
Altman foresees that advancements will create job sectors we need to prepare for.
He highlights that ongoing education will be vital for job seekers.
Altman predicts that job market fluctuations will occur while industries adapt to new technologies.
However, long-term growth is expected in areas such as artificial intelligence and sustainable energy.
Sam Altman concludes that adapting to future workforce demands requires a commitment to ongoing education.
As the job market transforms, maintaining adaptability is essential.
Today, we're examining the explosive rise in silver prices, now above $30 per ounce, through the lens of Andy Schectman's insightful analysis.
Schectman argues that this surge is indicative of broader economic trends and reflects growing investor interest in precious metals.
Schectman highlights that the current surge in silver prices is primarily driven by increasing industrial demand and investor hedging against inflation.
He believes this demand could sustain higher prices, especially as more investors seek stability. According to Schectman, various industries are ramping up their use of silver, which is playing a pivotal role in driving prices upward.
So it's not just a speculative bubble, but a response to genuine market demand.
Exactly. Many see silver as a safer investment as economic uncertainties loom.
What does Schectman predict for investors looking to buy silver?
He warns that while prices may continue to rise, the market could face volatility, making timing crucial for new investors.
In conclusion, Schectman advises potential investors to carefully consider their entry point and market conditions.
Monitoring economic indicators will be key as we navigate this shifting landscape in precious metals.
Wow, what a wealth of insights we've gathered today.
Absolutely. Each guest brought their unique perspective, didn't they?
For sure. Andy Schectman highlighted the surge in silver prices as a key economic indicator.
And I found Sam Altman's take fascinating. His focus on the transformative power of automation is so timely.
Right? It's a double-edged sword, though. Gareth Soloway's cautionary approach really makes you think.
Exactly. And then there's Gary Wagner connecting silver to gold trends, adding another layer.
What stood out to me was how they all stress financial planning during these uncertain times.
Absolutely, it's a common ground amid varied opinions. But then you have the disagreements on automation's future.
Yes, it seems like where one sees opportunity, another sees risk.
And Jeff Snider's warning about oil price inversions further complicates the economic landscape.
If you found this discussion insightful, don't forget to give us a thumbs up and subscribe.
Your support enables us to continue bringing you expert analyses like these.
Stay tuned for our next episode, where we tackle global trade dynamics.
You won't want to miss it.